The minutes of the monetary policy meeting held in the first week of August are out now, and they show that most of the external members, especially Dr. Jayanth, Varma and Ashima Goyal, seem to be more reassured that growth is resilient and inflation too is dipping. Dr. Shashanka Bhide is less sanguine about inflation. The confidence of inflation seems to be coming from lower commodity prices and possible recession fears in the West. However, the Reserve Bank of India members on the MPC, including Governor Shaktikanta Das and Deputy Governor Michael Patra in particular, sound a little more worried about a continuing wage price spiral that can affect people's inflation expectations, and they worry that that can push up the CPI. Of course, all of them unanimously agreed to a 0.5 percentage point rate hike, repo rate hike, on August 8, which was announced. And now have with me all the external members, Dr. Jayanth Varma, Dr. Ashima Goyal and Dr. Shashanka Bhide. Gentlemen and Ashima, thank you very much indeed for joining me and helping us understand more about your thoughts about growth and inflation. Dr. Varma, let me come to you because you were the dissenting member as far as the stance was concerned, or the withdrawal of accommodation statement was concerned. It appears now, after reading your dissent, that you are more worried that the market would interpret that the terminal repo rate is going to be 6.5. Is that your only fear about the way the stance is worded?
No, I think I have worries on two counts. One is the word focus.
Okay.
I think it is not possible to have a unidimensional focus at this point of time. One has to worry equally about inflation and about the recessionary trends in the global economy. So you can't be focused only on withdrawal of accommodation. The second one, of course, is that in the current situation, that whole thing about withdrawal of accommodations, day 6.5, which is too strong a signal to send to the market. We may reach 6.5, we may not. So I think both of these are there. I think we should today be concerned about both sides of the story. Okay. What's happening to the inflation and what is happening to the global growth and recession scenario.
Fair point, sir. I'll come back to you about your concerns on growth, simply because at least the first quarter numbers, as well as the PMI, I mean, some of the lead indicators, auto sales, all seem to be very strong. But I'll come back to you on your concerns on growth. Ashima Goyal, your concern, your confidence is there in terms of India's exports as well as the growth story. You sound much more reassured. But let me come to the one point which stands out. You say that in a time of slump, the real rate should be -1%, compared to inflation. Whereas when the economy is on a growth trajectory, it should be +1%, the real rate. So now how would you like it to be? You think inflation, the real rate should be positive at this juncture because you're confident of growth?
Just to correct slightly, I didn't say that it should be -1 in a slump. I said it should be negative in a slump, but -1 is a lower bound. In the sense, it should be near, it should not deviate, it should not take too large absolute values and it goes too far from a neutral or equilibrium level.
Okay.
And I'm saying that the confidence in growth suggests that so far it has been negative in terms of 1 year ahead inflation, which is what we look at.
Yes.
But now, because growth seems more robust, we need to go slightly positive. And therefore, I voted for this 50 BPs hike.
Fair enough.
Because that takes it to about, if 1 year ahead inflation is 5, then it means that the real rate 1 year ahead is 40 BPS. Yeah? Positive.
Yeah. If we take the 1 year ahead inflation at 5, then we are already in positive real rate, Ashima Goyal. So by that logic, you would suggest that further rate hikes are not needed?
It depends on what happens to inflation and to growth. And because of the many uncertainties, like at the time when we wrote the minutes, when we had the meeting, there was more uncertainty about global commodity. Oil prices were still high around 100. After that, they're softening further. They've come to 94. Now, oil is very critical for us.
Yes.
And if you see RBI inflation projections, they really rose because they've factored in higher oil prices and higher fuel inflation in general. So if oil prices come in, then the inflation in the next few months is going to be much below RBI projections.
Yes.
Obviously, you will not need as much of a hike or, as we've been having, or we'll have to see.
Okay. Well, I'm not sure everyone shares that concern, and let me get Dr. Bhide on that. Dr. Bhide, actually, of all the experts, you sounded a little more concerned about inflation. I mean, all the external experts. And since you also refer actually to the monsoons being a little skewed in terms of spatial distribution. We have since got data on Kharif, and we know now that the sowing area of rice and pulses are much lower. I'm sure you're following the data much more closely. Would you worry a little more about food inflation going forward?
I think the factors that you mentioned clearly are important. I mean, going forward, I guess what happens to the cereal inflation, for example, I think would be important for overall food inflation also. But I guess in the past, the spikes in food inflation have come from vegetables, particularly, I think. So I guess there are always those uncertainties attached to food inflation. But I think clearly for food inflation, the cereals are going to be important going forward. I mean, so both in the case of rice and wheat. So I guess there is uncertainty attached to this, but I think these are the concerns.
Would you say, therefore, that the MPC can't yet take its foot off the pedal? The chances of inflation probably surprising on the upside is not gone. Actually, now we have one more data after your meeting. We also have the July data, which is actually taken inflation for the 4th month in a row lower. But because of this food uncertainty, would you worry that there are still upside risks?
Well, so I think, as I think everybody has mentioned, so the inflation rate has shown some moderation, but I think we are still, well above the rate that we are comfortable with. So I think that is the concern. So if there is any uncertainty with respect to the projected trajectories, then it's going to take so much more, make it so much more difficult, I think, to bring the inflation rate down. And I think, so there's this issue that if the food inflation is down, it's going to have a sort of, significant impact on the overall rate. But at the same time, I think the rest of the sectors, particularly, I think, in the so-called core inflation, ex-food, ex-fuel, and so on, that has shown stickiness.
Yes.
And I think that is where the importance of bringing that down, I think, that is that's a concern.
Okay, fair point, sir. But in the last number, even the somewhat sticky core inflation has come down to 5.8 from 6. So we keep our fingers crossed on that. Dr. Varma, let me come to the other very interesting observation you make. You had actually put forward an argument in favor of a dot chart. We learned that from the minutes. You want the external members to vote on a dot chart?
Yeah, I think I proposed that in the previous meeting. I had written it at that time as well. That the stance resolution looks very unclear to me. Okay. People interpret it whichever way they like, and we have to go around explaining what we mean by accommodation, what we mean by withdrawal of accommodation, and so on. And I believe that providing guidance in a more quantitative manner would be better. So that was the advantage of having individual members provide quantitative forecasts of the future trajectory. The second advantage that I see with that is that those projections are now of individual members.
Yes.
So each member is saying that, I can see the repo rate at X or at Y. And that is not the view of the MPC itself. The MPC itself is not making any commitment
I agree.
about where things would be. These are individual members making their forecasts. And that would provide a way for the market to know what is the thinking inside the MPC. What are people seeing as they look ahead? So that was the reason I think I proposed that. And I think the experience of countries which have done something like that have been quite encouraging. And I think there is merit in doing that. But I'm just one member out of 6, and if the other 5 don't like this idea, then
fair enough.
The idea just dies.
Yes. It appeared that even the Reserve Bank members whom we spoke to on press conference day were not in favor of the dot chart. The governor even referred to it. But Dr. Varma, if you were asked to draw the chart, since you wish to, what do you think? Are more rate hikes needed? Because you sound much more concerned about growth. That's why I'm asking, you think more rate hikes are needed?
Well, I think my statement more or less ends with saying that we need more front-loaded hikes. It's very explicit. All that I'm more or less explicit that 5.4 is not the end. So on both of these, I have very categorically stated this.
Yes, you do say.
So all that I'm saying is that I'm not sure that it should be 6.5.
Okay.
That's all that I'm saying. I'm not saying that we might pass at 5.5. I think there is more distance to go. And we are far above the target of 4%, which is what we have been entrusted with.
Exactly.
So I do not see passing at this point possible. What I am suggesting is that we may pass before 6.5. I don't think it makes sense for one member to make a forecast where other members are not. That's an asymmetric game, which I don't want to play.
Yeah. I take your point. You don't want to be the sole member to be making these forecasts. But, the point you raise about not being within sight of 4 is very important. You think that that is a bit of a failure of the current MPC and therefore more hikes are called for, or you should have advanced the hikes even in the past?
Well, my view of this band around 4% is that it is a band which accommodates mistakes in monetary policy, mistakes in forecasts, unanticipated developments. That is what this band is for. And therefore, the task of the MPC, when it encounters a crisis, would be to let because monetary policy acts with lags. If you get a shock, you are going to deviate from 4 in either direction. But what you want to do is to keep that deviation within the band.
Yes.
Now, if you want to do that, then what you need to do is that the moment one crisis is over, you need to bring the inflation back to the center of the band. It is an inflation at the center of the band that gives you the ability to respond to the next crisis.
Okay.
And the problem that we faced is that we encountered 2 crises in quick succession.
That's right.
Without giving us the time to bring the rate back to the center of the band. So we had the pandemic, and responding to the pandemic by allowing the inflation to drift towards the upper end of the corridor was fine.
Okay.
And ideally, we should have brought it down to 4, and then we would have been prepared to deal with Ukraine.
Okay.
But what happened was that the world did not give us that luxury.
Okay.
We were confronted with 2 shocks in close succession.
That's right.
And I think the lesson going forward should also be that the speed with which we bring the inflation back to 4 is something that we should worry about, because that is what leaves us prepared for the next shock. Now, we know that shocks are coming. We don't know when, we don't know in what direction and from where, but the way that we position ourselves to confront unanticipated shocks is to quickly bring inflation back to the center of the band.
Fair point, sir. A point taken. So your eyes are fixed on the 4% mark. My eyes are fixed on the time. I am being told I have to take a commercial break. Back in a minute. Please stay on with us.